uncertainty, as was also mentioned in my statement, and it's really very difficult to predict as to what the impact will be. Going forward, as we have mentioned, we will maintain a very close vigil on the incoming data and take a call. As of now, we do not have sufficient data to revise our GDP forecasts. As to your question on the on the absence of the word or the phrase very limited space, that was in the context when we moved from accommodative to neutral. We are continuing in neutral, and so that's why you don't find a mention of that in this statement.
Is it because it is 4.9%? That's why you're saying? Why is that phrase absent? Is it because of high inflation, or is it because we don't know enough about growth?
See, we will continue to monitor our macroeconomic conditions on a policy to policy basis, and accordingly take a call. So it's all very uncertain. We already did 100 basis point rate cut. The other thing is that monetary policy transmission is still happening. So we will continue. We'll continue to do whatever is required to facilitate good growth, while of course maintaining price stability.
थैंक यू सर. दाहिनी तरफ दूरदर्शन से श्यामा जी अपना प्रश्न पूछें.
Namaskar, sir. Sir, is RBI worried about the fact that these global changes, trade changes, will push up the inflation as the imports will get expensive?
See, if till now, see, first thing is that in India, we are less dependent on the outside insofar as inflation is concerned, and the other thing is that if at all there is an impact, there is also an impact on the growth, on the demand, and that has a reverse impact. We mentioned this, we elaborated this in our monetary policy statement that we made, I think, a couple of months ago, where we highlighted this aspect, that it moves in both directions. As of now, we don't see a major impact of this unless we have retaliatory tariffs and so on and so forth, which I really do not foresee. I request our DG if you would like to add something.
Sure. In addition to what Sir said, let me also remind that our inflation basket, nearly half of it consists of food, which does not get impacted directly by global developments. A significant part consists of non-tradables, which again does not get impacted by global developments. So to that extent of first order direct impact of these evolving uncertainties on India's inflation is likely to be very limited.
Thank you, sir. Thank you, ma'am. I'll ask Manojit Saha from Business Standard.
Thank you, sir. What has stopped the MPC from, given that you have reduced the inflation forecast to substantially lower to 3.1%, so what has stopped the MPC from a rate cut? Because you have indicated that you will be forward-looking, you will be proactive in interest rate decisions. So what actually stopped MPC from a rate cut? And also, if you can throw some light on whether the monetary policy is effective on pushing loan growth, because loan growth continues to be tepid despite a 100 basis point rate cut.
See, the reasons for maintaining the policy rate are very clearly stated in our resolution, which also found a mention in my statement. Let me reiterate those. One, monetary, we did first of all, a front-loaded rate cut, 100 basis points over a short period of 4 months, February to June. Transmission is still happening. Uncertainties still continue. The situation is still evolving. Insofar as inflation is concerned, the projections are more or less, if you discount food, which is very volatile. I think I mentioned it somewhere earlier also that while our headline and food inflation over the last 8-9 years since FIT was introduced has been at 4.9%, the volatility in food prices is of the region of 3% on an average. The deviation, the absolute deviation is 3%, 5.9 plus minus 3% is the average. Whereas that in core is much less, about 1.1% in absolute terms. So the changes that have happened are primarily because of food and not core inflation. Core inflation, in fact, has only gone up slightly from the previous months. So these are the reasons that we have continued to maintain the policy rate. We will keep watching incoming data and evolving outlook of our macroeconomic conditions, and the MPC will accordingly take a view on a policy meeting to meeting, from meeting to meeting. Insofar as the impact of rates is concerned, I have given figures in the statement. It's about 71 basis points on the credit side. On the credit side, bank credit rates till June, within a period of 4 months, 71 basis points, of which about 55 basis points is because of the change in the rate and not because of the change in the mix of the credit loans. So that has happened, and obviously that will certainly help not only growth in credit, but also it will impact the real economy. As you are all aware, it happens with a lag. This time, while the rates have of course come down significantly faster, the impact on the real economy will also start to happen. So there is no reason to believe that this will not have a growth inducing impact, inducing impact.
Thank you, sir. Next, we'll have Mr. Mayur Shetty from Times of India.
Thank you, sir. You explained the credit, the slowdown in credit demand. You said that there is some shift to other other financial instruments, but the sectoral figures show that even housing, which typically goes up when rates go down, has slowed down. What do you think is the reason for this?
I think it's important to, first of all, whenever one is looking, it's important to look at data in a, data at a regular basis, at a micro basis, at a month-to-month, quarter-to-quarter basis. But to extract signals out of that, I think we should be hesitant in extracting signals out of that data. So it is the long-term data that is more relevant to be making any to get any insights out of it. And on the other hand, I would also like to point out, so these fluctuations will be there. There will be noise, as you are aware, there will be noise. So we have to remove that noise. How do you remove that noise? It becomes very difficult if you are actually looking at data on a month-to-month, day-to-day basis. Having said that, housing credit I think overall it's doing well. It's doing very well. It may have moderated somewhat, but these are to be expected. There will be, some ups and downs. I think overall housing credit is 14% as we speak, which is very good, which is more than our average credit growth rate of about 10% that we are having this year. And some of the impact, as I mentioned, happens with a lag. We have reduced the rate, so while the reduction in the rates has happened, it translating into credit growth rate, people take, their time to, it's a long-term investment. Housing is not, a short-term investment. If you go to the market, you buy a consumer durable, it's not like that. It's a long-term investment. So that also has